Bitcoin before bed, my friend. Let the day gently end. Stories of crypto, soft and true. The blockchain waits for you.
Is Bitcoin entering a 10-year bull run or bear market? Bitcoin just hit $126,000 in October. Then it fell nearly $40,000. Extreme fear has returned. ETFs are seeing outflows. And everyone's asking the same question. Is this a temporary pullback in a decade-long bull run, or are we heading into a bear market? Tonight, we're going to look at the evidence on both sides and try to separate the signal from the noise. Let's start with where Bitcoin is actually trading right now. The current state. As of late December 2025, Bitcoin is trading around $96,000 to $98,000, down roughly 23% from its October peak of $126,296. That pullback caught many people off guard, especially after the sharp November drop of nearly 17%. What's important to note, this kind of volatility is normal for Bitcoin. Historically, Bitcoin experiences 10% plus drawdowns about 3 times per year. So while the headlines scream crash, the data tells a different story. The more telling metric is the Crypto Fear and Greed Index, which is currently sitting at 20, an extreme fear reading. This same level preceded major market bottoms in 2020 and 2022. But here's the thing. Extreme fear is often a contrarian indicator. It's the moments when everyone is most afraid that smart money starts accumulating. Let's look at the supply side because that's where the real story lives. The supply story. Bitcoin's supply dynamics have shifted dramatically in 2025, and this is crucial to understanding whether a bull run is likely. First, the halving that happened in April 2024 cut the daily new Bitcoin issuance in half, from about 900 BTC per day to roughly 450 to 470 BTC per day. That's a massive reduction in fresh supply hitting the market. Historically, this supply squeeze has been a leading indicator of bull markets, though with a lag of 6 to 12 months. Second, and this is even more important, Bitcoin that's actually available to trade is shrinking dramatically. Over 403,000 BTC left centralized exchanges in 2025 alone, bringing the on-exchange balance to multi-year lows. In other words, holders are moving coins off exchanges, which means they're taking supply off the market. If fewer Bitcoins are sitting on exchanges, there's less available for sudden sell-offs. Third, the illiquid supply, Bitcoins held by long-term investors who rarely sell, hit a record high of approximately 14.3 million BTC, about 72% of all circulating supply, by September 2025. This is significant because it tells us that the vast majority of Bitcoin is in the hands of people who believe in the long-term narrative. They're not panic selling. They're holding. What does this mean? The free float, the Bitcoin actually available for trading, is getting tighter. Tighter supply in the long run favors higher prices. But it also means volatility can be more extreme in both directions. The historical halving cycle. Bitcoin's price history is remarkably predictable around one thing: the halving cycle. Let's look at the numbers. After the 2012 halving, it took 367 days to reach the next peak, then 410 days to hit a bottom. After the 2016 halving, it took 526 days to peak, then 363 days to bottom. After the 2020 halving, it took 547 days to peak in November 2021, then 376 days to bottom in November 2022. Average pattern. Halving leads to peak in roughly 480 days, about 16 months, then bottom in roughly 383 days, about 13 months. The April 2024 halving by this math would suggest a peak around August 2025. Bitcoin actually peaked in October 2025, just a couple months later. And the bottom? Well, that's where it gets interesting. If the pattern holds, we're probably 3 to 5 months into what could be a 12 to 13-month correction cycle. That would put the potential bottom somewhere around mid to late 2026. Some analysts predict that low could be around $60,000 to $70,000. But, and this is crucial, the pattern is starting to break because Bitcoin's market structure has changed. The institutional shift. Here's why some analysts say the traditional 4-year cycle might be dead. Institutional adoption. In 2024, spot Bitcoin ETFs were approved in the United States. This changed everything. For the first time, large investors, pension funds, insurance companies, wealthy individuals could get Bitcoin exposure without actually taking custody of coins or using crypto exchanges. In 2025, that institutional demand has continued to grow. The crypto ETP landscape expanded with new products for other cryptocurrencies, signaling broader market maturation. What does institutional adoption mean for volatility? Smoother, less wild swings. Look at gold. It went through a decade-long bull run in the 2000s once it became a mainstream institutional asset. Bitcoin is following a similar trajectory. On-chain data shows that whale holders, those with 100 to 1,000 BTC, now control about 26% of Bitcoin's supply, and institutional cohorts are a significant chunk of that. When institutions hold assets long-term, they don't panic sell on 20% drawdowns. They hold through cycles. The bull case, in summary. Institutional adoption is smoothing out volatility, creating a more stable floor, and setting up the conditions for a long, gradual bull market, potentially one that lasts a decade. The bear case. But it's not all bullish. There are legitimate risks. First, the technical picture is mixed. Bitcoin is currently in what's called a rising wedge formation, a bearish pattern that often precedes further declines. Support levels around $95,000 to $96,000 are being tested, and if they break, the next major support could be around $80,000 or even lower. Second, ETF flows have turned negative. In November 2025, Bitcoin spot ETFs saw over $3 billion in outflows. That's retail money leaving, which suggests that retail investor confidence is shaky. Third, macroeconomic headwinds persist. Interest rates remain elevated, geopolitical tensions are rising, and trade wars are a real concern. If the stock market enters a significant correction, Bitcoin could fall with equities rather than acting as a hedge. Fourth, the extreme fear reading has no immediate bullish signal. While extreme fear has historically preceded bull markets, analysts note that the current market lacks the liquidity and conviction to trigger an immediate recovery. In other words, fear is present, but it might get worse first. The bear case, in summary. A technical breakdown, mixed institutional demand, and macro risks could push Bitcoin into a deeper correction, maybe down to $70,000 or lower, before the next sustained rally. Whale activity. Here's something interesting that not enough people talk about. Whale behavior. From mid-October to late November 2025, Bitcoin whales, entities holding 10 to 10,000 BTC, sold over 113,000 BTC, which helped push the price down. That looked bearish. But then something shifted. In early December, those same whales started reaccumulating, buying back roughly 47,600 BTC. This suggests whales saw the pullback as an opportunity and stepped in. That's a sign of confidence, not panic. When whales distribute, they're locking in profits. When they accumulate again, they're buying dips. The fact that we've seen both in quick succession suggests we're in an accumulation phase, a relatively narrow trading range where smart money is building positions before the next leg up. Think of it like the market taking a breath before the next move. The forecast. Let's look at what analysts are actually predicting. For 2026, predictions vary widely. Conservative estimates see Bitcoin trading between $90,000 and $135,000. More bullish analysts expect a range of $150,000 to $230,000 if institutional demand accelerates. For 2027, some analysts project Bitcoin reaching $200,000 to $300,000, driven by increasing adoption in both developed and emerging economies. For 2030, the long-term view, predictions become even more varied. Conservative forecasts suggest $250,000 to $400,000. More optimistic projections range from $500,000 to $900,000. Some extreme views, like Cathie Wood's ARK Invest, suggest Bitcoin could exceed $1 million by 2030, though most analysts consider this unlikely given current blockchain limitations and market dynamics. The wide range shows just how much uncertainty exists. But notice the median of these forecasts. They're all higher than today's price. Even conservative analysts aren't predicting Bitcoin goes to zero or stays here for a decade. The honest answer. So, is Bitcoin entering a 10-year bull run or a bear market? The answer is, both are plausible, and the data is genuinely mixed. The bull case is grounded in fundamentals. Scarcity with fixed supply and tightening free float, a halving that reduces new issuance, institutional adoption smoothing volatility, whale accumulation, and historical precedent. The bear case is grounded in technicals and macro risks. A bearish wedge formation, ETF outflows, macroeconomic headwinds, and the fact that the extreme fear reading still lacks bullish confirmation. Here's what seems most likely. Bitcoin is probably in a multi-year bull cycle that could span a decade, but we're likely to see a significant correction, maybe 20 to 40% from current levels, before it really takes off again. This correction could be seen as an opportunity for long-term accumulators. The key indicators to watch. Support levels. If $95,000 breaks, watch $80,000. If that holds, we're probably in a healthy correction. If it breaks, sentiment could get much darker. ETF flows. If they turn positive again, that's a green light for institutional re-entry. Macro events. Trade wars, interest rate cuts, or recession fears will move Bitcoin more than on-chain metrics in the short term. Whale positioning. If accumulation continues, as it did in early December, that's a bullish sign. Ending thoughts. Bitcoin has always been about cycles. Boom and bust. Hype and despair. The fact that we're in extreme fear right now doesn't mean the bull is over. It might just mean the best accumulation opportunities are still ahead. For Bitcoin before bed, the moral of the story is this. Focus on the long-term fundamentals, ignore the daily price swings, and if you're thinking about your position, the fear in the market right now might be worth considering. The market will still be here tomorrow. And so will these dynamics. Sleep well.
When the markets close their eyes and the moon begins to rise, Bitcoin before bed tonight, everything will be alright. Drift away.